Hi everyone, delonewolf here, and welcome to EVE Talk, your weekly look at the market in EVE Online. And as we're just about 1 month away from the spring, this year is really roaring past for me. From my perspective, time is going so fast at the moment, it's incredible. And I do think that we'll start to see more and more stuff coming out for the Citadel expansion. The CSM summit should also be over, so I'm definitely looking forward to the minutes from that. Yeah, I'm standing ready for any information coming from CCP, and I think we could be in for a few interesting weeks and months. So let's take a look at the market. Of course, that's mainly why we are here, and as always we will start with plex at 50 seconds. Sounds like a good idea. And 1192, 1193 when I was checking them, so that means that a lot of them did just come in 4 minutes ago. 36 plex at 1192. It's pretty obvious that plex are under pressure at the moment, breaking the 1.2 billion price mark right here. This could be pretty significant. I do still think these are sale forces that are doing it. The volumes are slowly normalizing here after a bit over a week of extremely high volumes. We are starting to settle down, and it's going to be interesting to see what is going to happen after this. I'm hoping and expecting that plex will go back up as we get more information, more hype going for the Citadel expansion. But of course I could be wrong, and this pattern right here of course does not bode too well if you've been expecting plexes to rise even further. So I was really thinking at first that this increase in price right here could be the start of something, but then a plex sale has once again crushed the price of plex, going back down to 1.2, and now we're actually still under pressure at the moment. So here's the multiple pilot training certificate, obviously very similar chart, went up to 1.25, also broke 1.2 and is under pressure. These are selling for 1.2 billion at the moment. And we've got 1 more hour to finish EVE Talk. That should be possible. Here is the body resculpt certificate. That's interesting, actually taking off in price right here. Let's say that we had 220 million, even less than that about a week ago. Volumes did go up as well, along with the plex volumes. All of that is slowly normalizing as well, but now they are going for 255 million as the lowest price. So once again showing that while the body resculpt certificate is tied to Aurum and thus also tied to plex, it really does its own thing. It's its own little market, and from 220 to 250, 30 million increase in price at least. That's not bad. That's more than 10% here. So this is definitely a bit of a jump up, probably done by a major player trying to increase the price of these body resculpt certificates. It's not completely out of line either, because we can see right here that before December they were going for 260, 250, something like that, and we'll have to wait and see if this could actually be a precursor for increases in other goods as well. Next up here we've got the skill extractor, who are extractors that are dropping in price, 276.5 million right now for the buyers, for the sellers right here. So if you want to get one straight off the market, that's actually decently affordable. So if you have your own SP that you need to switch, and actually I should probably do that, then this is not bad. Just look at the volumes available here. There's an awful lot of extractors on the market right now, so it could just be that people are still trying to convert their Aurum to ISK through the skill extractor, putting more and more pressure on the price. Of course the decreasing volumes here will have their part as well. After the initial hype, it is normal that volumes decrease and that people have done what they needed to do within their own accounts and things like that, and so now the actual market forces are going to start to take over. It's going to be interesting to see if they will actually make these skill injectors themselves more affordable or not. These are going for 653 million at the moment, 630, well 640 I would say for the buyers. Pretty close margin here. So we went as low as 615. We are already back up. These do seem to be a bit more volatile than the extractors, depending on the amount of available SP that people are willing to rip out of their characters to sell for ISK here once again. The longer term trend on these is going to be really interesting to keep an eye out for. So I'm definitely planning to keep this one right here in the category. Next up, moving on to some minerals, 505. Sounds like a plan. I must say that, of course, the week has been decently low on information. And if I'm not mistaken, in March you're actually planning some drifter stuff. So this is basically a bit of a cool down week, I think, on this ETH talk. Not much has happened that I can tie into drastic changes to any of the goods compared to like last week or 2 weeks ago. So titanium still a little bit on a downtrend, but it did stop at 6.10 ISK right here. Bounced off of that just a little bit. Sellers are at 620, buyers are at 610. Volumes wise, 135 million, 491, 691 right here. So we're not seeing the billions of titanium being dumped anymore. Here we've got 1.8 billion units being bought, a billion here, 800 million here, 1.5 billion, still less than 24 hours old. So I think that the buyers are actually at the moment increasing their prices. There is a lot of competition for titanium coming out of the woodwork. So it is definitely a possibility that this drop in price here is due to the skill extractors and the skill injectors, where people wanted to liquidate some of their stocks so that they could buy plex, buy aurum, and try to get in on the craze of all of the skill points that were being traded. But now that that has cooled down, the normal mechanics take over again, and we have quite a bit more demand than supply for titanium, which should increase the price back up, maybe even back up to the 6.4 trade range, 6.3, 6.4, something like that. We'll see if that happens, but it is definitely a possibility that, as I've said, we're cooling down from everything that's happened with the tradable skill points, and that because of that now we will start to just basically normalize a little bit. Let's see what pyrite is doing. Pyrite is actually dropping quite substantially, going to a 6-month low of 10.8 ISK. So that's definitely a sharp decrease in price right here. Volumes going down just a little bit as well. Let's see what the sellers are doing. Still coming in at 10.9, buyers at 10.7, and they're still coming in with 400 million units, 200 million units, few of those orders, whereas the buyers, well, we have one of 700 million units, but that's already several days old. So again, there is still oversupply in the pyrite market, despite the drop to like 10.8 ISK on the chart, which is a 6-month low. At some point this will probably stop. It's actually a 1-year low, so going below this, it could be interesting as a bit of an investment for pyrite, I think, if you look at the historical chart of a 1-year chart here. That's really unexpected, seeing as if we take the titanium chart, we're actually at a pretty high point for the entire year, and for pyrite it's the exact opposite. That's really weird for two high-sec minerals. Next up here we've got, not Megasite, we've got Mexalon, which is just continuing its slow descent, and once the 60 ISK price mark was broken, we are starting to see a bit more volatility. I think we were clearly trading in the 60 to 62 ISK trading range here for several months on end, but now here we've got data points going as low as 58 and then going starting out above 60 as well. So volatility could be back in the Mexalon market, but we are still slowly dropping. We're still seeing 50 million, another 10 right here on the buyers, less than 24 hours old. Well, you've got 10 million and a decently big one of 80 million, but that's at 57.7 ISK as well. And other than that, much smaller volume. So still, I'm seeing some pressure on Mexalon. I'm seeing some volatility come back as well. And we will have to wait and see what all of these will actually start doing. Mexalon, obviously, for the 6 months, like right in the middle of its 6 months, so it's not high, it's not low. Maybe I should also take a quick look at the 1-year chart, right where we started a year ago. So this is Mexalon on an average price. That just adds to the weirdness. Next up here we've got Isogen bumping off of 100 ISK, trying to at least, but already going back down as well. So I think that Isogen is trying to find its bottom at 100 ISK. The buyers are just not having any of that. They're trying to pick up their Isogen at 99 ISK below that. It would be an important barrier to break if they could make it happen. Supply is still coming in though. Look at that, almost an entire front page of pretty recent sell orders. Not that huge in volume though, just one, but the latest one, of course, 13 million units again coming in here, 7 million units coming in here as well, whereas the buyers are trying to drive the price down even lower, and you have to dig a little bit lower to get to 18 million units, which is pretty much on par with the buyers. You have to go quite a bit lower to 50 million units, but that's more than a day old. So the competition is actually still trying to drive the price of Isogen below 100 ISK, and I actually think that if that would happen, it is pretty dangerous. You can also see that the increase, the uptick here, is due to a major volume spike. I think someone made an investment around 100 ISK for a lot of Isogen for the longer term, and that's a little bit of a bump in the road, but I'm still seeing that pressure, the attempt from the buyers to get Isogen to break 100 ISK, which could actually start a tumble for Isogen to go even lower. And if we go on the 1 year chart, we are not at the 1 year low, but we're not that far off. So if Isogen could break 100 ISK, I personally do agree with whoever invested right here that it could be the right time to buy up some Isogen and make that investment. So that's definitely a weird situation for me in the high-sec minerals. We titanium at a high point, Isogen and pyrite at a low point, and then Mixalon right in the middle. That's just some crazy differences between all of these high-sec minerals that are doing their own thing, and let's see if they'll ever end up all aligning once again and doing the same thing. Something like the Citadel expansion could of course be a trigger for that. Next up we've got Noxium, who is, well, that's decently violently swinging. But unfortunately, if we go for the 1 year chart, it is violently swinging at its very bottom. So 460 ISK, that's definitely not very high. I would say we've also been at peace for a very long time at the moment, so the miners can just do their own thing. We are probably in a bit of an oversupply situation, and this could be the reason why we see many of these minerals at a very low point. If you consider that to be a major factor, then of course you got to be careful for your titanium holdings, which is so far the only one that's at a 1 year or 6 month high. So be slightly careful here. You can see the volatility, but again, with bottoms at 460, this is probably just someone saying, okay, 460, that's low enough. I'm going to spend a couple billion on Noxium, make that purchase, and be willing to wait several months maybe for the price to increase here once again. Could be a war that's needed, could be the expansion that's needed, but at some point Noxium should definitely crawl out of this hole. Then next up we've got the Nelsik ones. Here is the Zydrine chart taking off quite nicely back to 1250 ISK here. So in two steps there was a bit of hesitation when we went above 1200, but we're clearly breaking through that now. Sellers 1268, buyers 1230, they have to follow suit, and supply is just slowing down quite drastically here. Nothing in the last 24 hours. So at the moment I think that Zydrine is trying to crawl out of its hole, because that's obviously also a pretty low price after the major increase here, having to give back 50%. I'm actually decently surprised at the volatility here. You could have clearly bought Zydrine for a decent amount of time below 1000 ISK, and now you could be selling them very easily at 1250. And so that is an increase of, well, that's an easy 20-25% that will have been made in about a month, or a bit more than a month's time. So that is not insignificant to see this volatility back in these Nelsik minerals. It's just at a completely different average, of course, compared to where it was a year ago because of the changes to the Nelsik ores. 1250, let's say, on the chart for Zydrine. Let's take a look at Megasite then. Much less volatile, up to 1200. And so we are once again in the weird situation where you can buy Megasite for less than Zydrine, which it's always been the exact reverse. So these Nelsik minerals are now, well, making some weird bounces. This could be some market manipulation, but here again you can see a really big volume corresponding with not an increase in price. That's really weird. Actually, that Megasite stays at 1200. It's also weird that Zydrine is at 1250, but it could just be the new normal situation because of the mineral changes, and so we have to keep that in mind. It is just possible that Zydrine is the one that's slightly harder to get at the moment for some reason, and thus that people are just not bringing it to the market. They may not have it, or they may be actually trying to manipulate the price of Zydrine back up. But either way, Zydrine would have been a really good trade for over 2 months here, when you could have picked those up well below 1000 ISK. When it comes to Megasite, of course, that's a lot less, but you're still at the bottom of around 1000, and currently they're selling above 1200 as well. So it's going to be interesting. I should definitely keep a close eye on these and see if there is indeed more volatility coming back, because while it's not that visible in Megasite, the Zydrine increase here is pretty damn sharp, and that could be an indication that this will violently go back down as well if people decide to actually dump their stocks at a good price as well. So that's it for the minerals. My overall feel of that one is, what the hell is happening? Pretty weird mineral market so far. Next up, let's check out some Tech 1 ships, 1610. And let's see here, the Armageddon dropping down to 210 million, which is sort of weird because there's not that many of them, or there were not that many of them, but 100 Armageddons coming to the market, another 95 right here, selling at 214 million is putting some pressure on the price. It's just that not that many people are bringing them to the market, but the chart here below 210 million, and thus the average trading price of the Armageddon is probably close to 210 at the moment, with, well, I would say decent demand here. I mean, we get several buy orders. You get a nice big page of buy orders, or half a page, that are like less than 24 hours old. They're in fact less than 6 hours old, all of these, but a lot of them probably just get filled up by people that bring Armageddons to the market. So that is pretty interesting, to get an average price of 210 with no Armageddons for sale anywhere close to that price. Next up, let's take a look at the Caracal. Bit of some volatility coming back here, jumping up to 12 million since February 1st. So this is actually like a 3-week move. Could be significant, but it's already going back down as well. So does that mean that we have some volumes coming in? Yes, we do. Look at that, 18, 51, 40, 172 and 56 of these Caracals in the last 24 hours, trying to take advantage of prices close to 12 million. They're going to put some pressure on this, and so will probably move back down again. So it is a new top since I saw the decrease in volatility, but considering the amount of Caracals still available on the market, I think we're okay for decently stable prices here. Next up, we've got the Dominics, also slowly stabilizing just below 200 million. The volumes here, I would say that these are okay, and we still have 12 of them. Whoops, I actually have to price like that. That was a misclick. 12 of them coming in as the latest sell order, which is just going to add a little bit to the pressure, to the stability of the Dominics. Not a bad sign in my opinion. Next up here we've got the Drake. Actually, bottom falling out after a nice spike that seemed to indicate that there was more volatility coming back possibly in the Tech 1 market. One thing that could happen here is an overreaction, because selling them at 57 million was very attractive, and that's exactly what happened. So people still have Drakes that are coming to the market. Person willing to sell them for 53 million right here is just adding to the pressure right here for the Drakes. And so we have this situation where a price spike caused an over response in supply, and now we're actually dropping well below the average for the Drake of like the last few months, and that's something we've not seen in a very long time. Next up here we've got the modeler, just basically averaging above 11 million. Is nothing too drastic to report, except that we're almost empty of them. So you just need to buy 6 or up to 13 of them, and then we are talking sellers at 14 million. So it would be very easy to create a spike for the modeler. Volumes though are still at just below 50 a day, so volumes have been dropping. It could be manipulated into a price spike, but I also do feel that this is a gap that can be plugged very quickly. Because the modeler is just a cruiser, it's pretty easy to make quite a lot of them. But if you want to spot an opportunity beforehand to maybe be able to sell modelers at 13.5 or 13 million, which would probably be a decent margin, add an extra 7-8% to your margin on the production, then this is definitely something to keep an eye out for, because if they still don't come in and another 13 of them are being picked off of the market, then we will see a price spike here, and you will probably have an opportunity to sell them at a much better price. So next up here we've got the Myrmidon, a very similar situation to the Drake, where a price spike seems to have caused an overreaction from the suppliers, and we went as low as close to 51 million, and we're now trying to settle at around 52 million, and you can see that we still have quite a few of them on the market. People are trying to bring them in at 53 to 54 million, but we still have like an older seller of 12 of them that was willing to sell them below 53 million, and someone else followed suit here with a very recent order as well. So this is clearly breaking the mold here at a 6-month low for the Myrmidon right after a spike. So just like with the Drake, we do see that there is some more industrial potential, I think, in the Tech 1 market at the moment, and that for the first time since quite a long time we actually see the supply overshooting a little bit, causing the price to drop below its averages. Next up here we've got the Oracle, again breaking 80 million on the downtrend, but I would still put this at a decently stable Oracle in the last few months here, trading in the 80 to 85 million trade range, which is quite normal. But again, to see that that average being broken, this time it's not broken with huge volumes, but people want to sell their oracles, they're bringing those to the market, and so the price is dropping. Could it be that the capital changes are putting people into the mood to get back into some capital ships, and does that some of the sub capitals are suffering from that? It's a possibility, but that's of course quite speculative as well. Next up here we've got the Raven, trying to trade at around an average of 188. Pretty violent spike here, but if we can keep it within this range here, so that would be 186 to 192, then we would be at a pretty average Raven. Are there enough of them on the market here? Probably not though. So this could still be in for some volatile times for the Raven, but considering the average price, again, most of them are actually being sold straight to the buyers at the moment, and it's just a few people that probably bring in a few of the Ravens close to 200 million that are picked off at some point as well. Data point up to 200 million, as I've said, but most of them trading in the 188 range, which are probably buy orders that are being filled. So pretty interesting to see that it's actually the buyers that have some power at the moment in a lot of these Tech 1 markets, despite the fact that we're seeing very low supply numbers at the moment. Next up we've got the Stabber, slowly going back down as well, slowly actually edging back to its 10.5 million average, and that is because we have no demand for this and we have really decent supply compared to that. So that one actually slowly dropping back down after the decrease in volatility. We're now actually breaking once again the average of probably 11 to 11.5 million that we were trading in for quite a while, and we're actually going below that. Next up here we've got the Tornado. Tried a spike as well, went back to 76 million. Are we seeing decent supply? Yes, we are. Look at that. 2, but the latest ones are 20 and 37 tornadoes, which are just going to add to the pressure here once again, and I do think that this could correct back down as well. Will we overshoot? May not be enough tornadoes coming to the market, but any price spike is considered a major opportunity at the moment and is definitely drawing a lot of the industrialists to try and plug those gaps. And there is this threat that people could overreact a little bit with the supply, causing them to drop below their average prices in the last few months. It's interesting to see that this mechanic is coming back. Of course, this could be due to lower demand as well. Our people starting to drop out of EVE a little bit, have a bit of a wait and see approach until the Citadel expansion actually hits. That is definitely possible. The holidays are over as well, so activity could be slowly decreasing. And I think some of the people that are very, very stable in their EVE playtime, I'm definitely one of them, are industrialists, and so that could be a reason here as well, but we'll see. Of course, I'm very excited to see what happens with the expansion myself. Here's a Typhoon showing some volatility, starting off at 180, going up to around 200 million. Double spike here, pretty interesting in a very short term, but again, look at the response here. The opportunity to sell Typhoons close to 200 million is causing people to bring a lot of Typhoons to the market, and 59 of them at 199 million will just put that pressure on the price, I think. Considering daily volumes of less than 40, that should definitely do it. And as a result, if people keep bringing Typhoons to the market, seeing this as one of the few opportunities, because with the Drake at a very low point, with the Myrmidon at a very low point, where else are you actually going to put your efforts towards? Then it could again cause oversupply situation in some of these goods, and we could start to see lower prices. And here we've got the Vexor. After a very long period of stability, actually we're seeing a price spike, but that is being plugged very quickly. More than a front page of new Vexors coming in here, 40, 26, 49, 42. Whoever managed to do this, to manipulate the price, must have had pretty big coffers, to be honest, must have bought quite a few Vexors. Is it an alliance that bought a Vexor fleet? It feels a little weird to me. I don't think that it's that much in the meta at the moment, but it could just be someone that wants to speculate, trying to make some money on Vexors at the moment. But it's going to be very hard to do, I think. I personally do think that we will drop here very sharply, and if it is a manipulation attempt and that person or that alliance, that group, whoever actually brings those Vexors back on the market as well, we could definitely again see an oversupply situation. That's going to be interesting to see if that does happen. If then we'll break down below like 11 million or even 10.5 million would be a breaking of the average. Will it happen? I think it could, so it's going to be interesting to see. Next up, the Tech 2 market, 2720. Let's see, the Tech 2 market honestly was still railing from that big volatility we saw early January here. So we've got the Basilisk slowly coming back towards a more bottomed average here, which a true bottom is below 180, but trade range of around 190 to 185 million is definitely not impossible, and we just broke 190, so we're coming back into a normal trade range. We still have really decent supply. We also have half decent demand at 181, so this is an okay investment. I personally think that if you want the chance to buy them and then have at least a chance for some volatility and sell them very quickly, then you have to wait for buyers to actually drop below 180 or very close to 180, and then you'll probably make a decent amount of money. But yeah, buyers back at 181, it's definitely not that bad of an idea to jump in on this. So next up here we've got the Cerberus, actually working on a next spike here. So that one is doing something completely different from the Basilisk. Reached the bottom of 175, they're currently selling at 204 million. Not bad for a Cerberus. Part of this must be Gnostic doctrines as well. I do think that the Cerberus is something that is flown in major fleets by big alliances as well. So this is definitely going to add a little bit to the pressure here for the price to stay up. But that just means that if you missed EVE Talk for several months now and you actually still have some Cerberus that you bought below 185 million, you can still take your profit at the moment, because lovely double spike here up to 205 million. Next up here we've got the Guardian. Unfortunately, that one is definitely trading at a higher average price of around 145 million here. So if you, I call this bottom close to 130 for a sure investment, and at the moment it's just too late for that. They're selling for 145, buyers are at 136 million, so pretty wide gap here. What is it for the Cerberus, by the way? 197 to 204, not that big a gap. For the Guardian, pretty wide gap. If the supply gets chewed, if more supply keeps coming in here, I do think that the price could drop back towards the bottom, towards like a trade range of 135 pretty soon. If you can pick him up below 130, that is your definite trigger, I think, to make your move. At the moment, yeah, just if you still have some lying around that you want to sell for a profit, then do so. But if you're looking for the investments, that's not the one you want. Next up here we get the Hound. Very surprised to see that this is still showing a lot of volatility. So we had a big move up here to like 23, 24 million, second leg up to 28 million, drop back down to 20, but we're already on our way back up again. So we're completely empty of hounds. That is completely crazy. They're currently selling for, well, if you can probably easily sell them for 30 million at the moment if you have some lying around, which is yeah, pretty damn crazy here to see these major volume spikes, incredible volatility in the Hound. This was your golden opportunity right here just before the new year. You could have picked up hounds below 17 million, and at the moment you're probably going to be able to actually sell them for 30 million or something like that. Completely empty. Crazy situation, lovely volatility, a lot of money being made and lost on a spike like this, but that's what we want to see in the Tech 2 market, of course. Trying to find those opportunities, and if you had made those medium-term investments right here in the Hound, then this is your time to shine. You can still, if you're careful with your selling as well, yeah, you've got golden opportunities right here. Next up, we've got the Ishtar coming off of a pretty high point of 200 million, heading back in the 180 million trade range exactly, but with a bottom here for the Ishtar at around 160 million and the buyer still at 168. This once again, it's probably too late to sell at the best price. Still okay if you want to dump them, but nowhere near the necessary low price to call it investment worthy. Next up here we've got the Manticore, did pretty well as well. You can buy those, let's say, close to 20 million as a good bottom price. They traded up to 30 million as well, going back down here. And well, we've got decent volumes, but 24 million for the buyers, 26 for the sellers. That's a pretty small margin, so a trade range that's happening here at the moment. So you can't say that you're gonna get to buy Manticores close to 20 million anytime soon. So just yeah, we're gonna have to ride this out. If we're looking for another buy opportunity. The Nemesis here, another pretty crazy situation here where, again, before the new year, you could have definitely picked them up below 18 million, probably below 17 million as well. And at the moment, they're selling for 25 million. Definitely not bad. A spike up to 26 million right here. So they're coming back on the market here at the moment, but at a very high price. This is lovely to see again. With a move up first to 24 million, dropping back, but then again, second leg up to 26 million. Very, very high volatility. Again, the people that have made their investments at the right time saw these really bottoms for the Nemesis, and you still have some. You're careful with your selling. You can make a lot of money at the moment. Next up here, we've got the Oneros. Lovely triple spike to 175, but with the bottom at 140, you can see we're nowhere near that. 157 for the buyers, very small margin here. Nothing you can really do on the Oneros except take money if you still have some really cheap ones lying around. Purifier next here. Definitely also trading at a very high range, historically speaking here at the moment. Supply-wise, well, not that overwhelming either, so we could be here for quite a while, but again, showing the potential volatility here on two nice legs, nice increases in price here in the last 2 months or so. Again, if you did buy them below 18 million, then that was you're golden at the moment. You're just making money left and right. Scimitar next here, that's again volatility, some of them are moving back down. A lot of them are in a dangerous situation, but several of them are actually moving back up. So again, with the bottom close to 120, they're currently selling for 158 million. You know, you're probably selling those right away with buyers at 153. Lovely spike from 120 to 145. A little bit of hesitation. Here we go up to 160 on the chart. That is just some crazy volatility. Lots of money to be made if you risked the investment. And then finally the Vengeance also crawling out of the hole here up to 24 million. You could have bought them for 19 million. That is starting to be interesting, at least, right? You had a decent opportunity again to buy for a very low price for a decently long time. And now you could make 25% profit on these Vengeances at the moment, and there's not that many sellers, so you can definitely I think expect to be able to sell these Vengeances, which is interesting situation. The Tech 2 market showing it is alive, showing volatility, and at the moment you've got a lot of sell opportunities, very few buy opportunities. If I had to point to anyone, it would probably be the Basilisk on buy orders, maybe. So if you assume that volatility is not over, if you know the reason for all of these very high points at the moment, and you expect this to still happen in the Basilisk as well, then yes, a few buy orders at the moment could be a good idea. I feel it's pretty risky. Honestly, this is your time to sell, your time to shine if you bought just below the new year here. That is, you're just making hand over fist the people that bought here. Next up, the Tech 3 market, 36. Okay, let's just go on the destroyers here first. Still some pressure on the Confessor going down towards 55 million. Are the volumes still coming in? Yeah, we still have about half a front page of new orders, including 12, 32, 40, 27. Really decent volumes, so there is some sustained pressure on the Confessor and decent availability as well. Next up here we've got the Hecate. Well, not that much new supply coming in, but it is below 55 million already. Still decent volumes that I'm seeing on the sell order side. So again, sustained pressure for the Hecate as well. The Jackdaw dipping below 55 million as well. What are the volumes looking like? Less than a day old, not that great. Older ones, still decent availability, but it is slowly going back down here. So you do have 78, 18 days. These are definitely much older orders, but there are still Jackdaws on the market. So it's interesting, but not that many new ones. And then finally the Zweepel here, again pressure towards 56 million. Availability definitely still there. Look at that, almost a full front page of very recent orders, 139, 18, 15, 40, 40. Honestly, for the tactical destroyers, I'm seeing more stability coming back to the market, because 3 of them have decent availability, 2 of them have huge or pretty decent volumes in the last 24 hours, and then the Jackdaw that is at risk, I think that gap could be plugged very quickly if the price did start to shoot up here all of a sudden in a sustainable fashion. So it's interesting. I'm seeing more Tech 3 production, and again signs that stability could be back, especially here in the destroyers. So let's take a look at some of these cruisers. Here's the Legion under pressure as well, dropping below 180, and still some Legions coming back, including the latest order of 16 units. So that should allow for the Legion to stabilize here as well. Next up we've got the Loki, again stabilizing apparently above I'd say just above 175, so 178 exactly, and 89. Let's see here, well, 10, 12 of them still coming in here. You still have 40 right here, 12 here, and you can browse down with a few cancel bigger orders as well. And yeah, I think the Loki could still stay stable within a trade range below 180 at this point. Next up here we've got the Proteus, also clearly pressured towards 180 million availability. I think that's looking quite alright. New orders, not that many of them, but still 20 new Protei coming on the market. Have a daily average, no, I wouldn't say that. Daily average probably 70, 80 units or something like that, 25%. It's not that great, but the fact that there are still a lot of Protea on the market right here, I think could keep this one decently stable as well. And then finally we have the Tengu, a little bit under pressure, trying to go below 190, I think. Yeah, 188 for the sellers. And this is where the move was still made. Tengus are still going close to 190 million, and so you're seeing very big amounts here coming in the last 24 hours for these Tengus. People are trying to still sell those at a better price, considering that all of the other ones are apparently dropping towards 180 and still have decent availability as well. It's interesting. I'm seeing definite signs that the Tech 3 production is going into full gear. There's a lot of availability. A lot of them are seeing big volumes coming in the last 24 hours, and the other ones where that's not happening, there are still some of them available on the market. And so if anything really happens in a Tech 3 market segment where prices would spike all of a sudden, I'm decently convinced that that will be plugged very quickly with production. So it's interesting. It is apparently stabilizing a little bit, this Tech 3 market. And then finally 4035, the extra products. First I'll do one that I wanted to check. I do think someone also told me to check this, nanite repair paste. So let's take a quick look here. Search nanite repair paste. Okay, really nice 6-month chart here, starting at 18 to 19,000 ISK very stably until December right here, and then increase in price and just kept going up. We are now at a 6-month high at around 29,000 ISK. Decent availability, a lot of decent volumes, I think. Let's see, 200,000 units, daily average, well, close to 1 million units, honestly. Sometimes that's pretty interesting. So nanite repair paste, obviously at a 6-month high, very high point, double the price pretty much. No, that's a bit too high. 50% increase in price, something like that, compared to 6 months ago. Yeah, definitely a pretty good suggestion to check. This is not something we see that often right here. It's in fact at a 1-year high, at a pretty high point, and the most interesting part is probably the little downward push here after breaking 29,000 that we could be going back down. So I would say if you've made investments in nanite repair paste, this would probably be the right time to sell. This very good suggestions. This is something that you don't see that often, a clear winner with a clear high point in the last 6 months right here. Pretty amazing to see. And then for the other suggestion that I got, it is Navy faction frigates, so pretty specific. I'm happy to oblige here. Navy faction, let's take a look at some of these here. Caldari Navy hookbill, yeah, 6-month high, also slightly going down from that high up to 20 million, starting at 12 million. This would have been a winner if you bought these like 6 months ago as an investment. Maybe I'll quickly take the 1-year chart here as well. You can see we're at a pretty high point for the entire year as well. So this could of course be faction warfare related, right? The availability, I think, of these Navy faction frigates will depend on and the cost will depend on how easy or how difficult it is to get the loyalty points at the moment. And as a result, faction warfare will have a major impact on these. Let's see what the Federation Navy Comet does right here. Actually coming just off of a 6-month low. So completely different from the Navy hookbill right here. This one, you're still looking at the 6-month low, 12 million. Well, we just jumped off of that, but let's say 2 weeks ago you were in a pretty bad spot for the Navy Comet if you had purchased them at any other point in the last year. So this again, I do think shows the slight risk in investing here, but I do think that this is much more predictable if you actually understand the mechanics behind faction warfare, the loyalty points, and thus how these might come to the market. then you could definitely make some money on this, I think. Here is the Imperial Navy slicer. After increasing in price over an entire year towards 22 million, it is now going back down towards 16 million. So this would have been a very good investment to make about a year ago, doubling the value in price right here. But you should have sold close to January though. That was a pretty high point. You know, if you have the information about what exactly happened to the Amar militia over this last year or so, that could be a very close indication to what's happening, what was happening with the increase in price here. And if something happened recently, that would cause the availability of loyalty points to increase, and thus a decrease in price here, pretty sharp one as well. So this is definitely an interesting suggestion. Here is a Minmatar ship, the Republic Fleet Firetail, averaging its 1 year price at around 11 million. Of course, in the last 6 months or so, that's definitely looking like a pretty good situation, going from 8 million to 11 million. Not that drastic, but could it be that the Minmatar faction warfare is like the least popular, the least played, and so has actually some more stability, lower variety in price from the lows to the highs. But what I'm definitely seeing here is clear trends right here. From May to July, clear trend down, then from probably late September up to now, clear trend up, albeit pretty slow. Crucifier Navy issue, new ship, so it doesn't exist that long. Let's take a look at the 3-month chart here, starting at 30 million, going back down to 18 million. That's just the newness of the ship, of course, but the trend here has been down, which is a bit surprising. Although if I go for the slicer in 3 months, you can see that we did go down in the latter half here. So it could be that that pressure is translating in the Crucifier as well. Next up here we've got the Griffin Navy issue, also a new ship, so starts at around 30 million and is actually managing to maintain a decent price, sellers at 29 million. So that's not easy, of course, to say a lot about this market just because these are new ships. Mollusk Navy issue started at 24 million, clearly under pressure, going to 13 million, pretty low point. This could be okay to actually invest in these probably for the longer term, as I've said. If then the right thing happens in Gallente faction warfare, making these less available, prices could start to shoot up. This could be interesting. And then we've got Vigil Fleet issue starting 20 million, something like that, currently going for 16 million. Minmatar, I guess, and yeah, less volatility in the Minmatar ones. So this is a pretty interesting suggestion here. These faction frigates, the fact that there are 4 new ones makes it a bit more difficult to actually gauge. But what I'm seeing here for the other ones that have existed for a long time are clear trends, month-long trends that are probably tied to faction warfare events. And that means that it's possible, I think, to time this market correctly and to make a lot of money on this. But you do need to keep a very close eye then on what happens in faction warfare, and that's where your gamble takes place. But very interesting suggestion. Thank you very much for that one. Anyways, that's going to be it for this Eve Talk then, guys. Thank you very much for watching, and I'll see you all next time.